Hey everyone, and welcome to Stock Talk on November 7th. This is SPY, the S&P 500 yearly chart. So obviously you can see today a pretty big move to the upside. And, for those people who are members of the course, you guys probably did very well in this environment because I talked about when we entered and why we entered on a break of a specific trend line, and then we've been holding it long for pretty much the entire time. So good job to all of you guys who did those really accurate technical analysis. And I've been, actively talking to you guys in the chat group. So keep that up, and there will be a separate members stock talk for you guys too. But here is the S&P 500, and we see a gap fill area from around 268 to 270. Now the markets are about to close, so we'll see where we close. But from 268 to 270 was a gap area that didn't entirely get filled. So one possibility, and I know a lot of people were talking about it, was the possibility for us to come down, go down first before moving higher. Obviously, we didn't have the down leg, but at the same time, our group did accumulate around this vicinity, and indeed, we did push higher at some point. The question was not really if it will push higher, but when it would push higher. That was really the question mark because, today is post-election day, obviously expecting a big move, and sure, we could have come down, fill the gap, perhaps overshoot a little bit before moving higher. That is almost what I wanted to see for the markets. I feel like we are going up too much, too fast, too quickly. And that is, there's some alarm bells. I love today's move, okay? And for those of you who are long the market, perhaps to the end of the year, this move comes as a welcome sight, and any down move you can possibly add onto those dips. That's fine. But for those of you who are swinging or day trading, or making a long position day trading or swinging very quickly, I want to place cautions on those traders. Yes, it looks like we're going to be closing quite nicely, perhaps even to the top of this candle over here. But keep in mind that we have the FOMC statement coming out at 2 p.m. Eastern time. I don't think anything is new that is going to be expected in that statement, but regardless, that is a news item, and that could shake the markets a little bit. But let me just say that if we can manage to close over 281.24 on a daily close, we should be moving towards our next resistance line of 286.95. Now, I know it's quite incredible. It is quite incredible that we are talking about 286.95. In the past few days, we were talking below 270, which is why I'm cautious, okay? There's a lot of optimism. There's a lot of short covering. Shorts who were shorting the market and who have been successfully doing that in the past few weeks got crushed today. And really, with the longs, so the FOMO, fear of missing out, the shorts that are that haven't covered, that are covering at this moment, it's lifting the markets. But the problem here is we're moving up significantly. We've established another gap area on SPY 275.20 to around 276.80. Around that vicinity doesn't mean we are out of the woods yet, okay? That's just my opinion. With this major up move, we can certainly, here's the 20-period moving average. It's nice that it's sloping higher, right? Here's the 50-period, here's the 50-period moving lower. That could act as a resistance line as we move forward, and we could certainly come back and retest the 20 at some point, which is quite likely in my opinion. Usually the markets, it's not going to go straight to like 286.80. That's going to be hard to see right now. So just placing caution, giving you guys a warning signal because it looks all rosy in the markets right now, but you guys know when it starts looking all rosy in the markets, we got to be careful, especially if you're trading short term. So That's the SPY. Let's take a look at TVIX or volatility. So big move down on volatility. You guys can see that we gapped down, sold off even more. What does this look like? This looks like something like this, right? Where we moved lower. Can you guys see this? Here's the 20 period moving average sloping down, gap down, push lower, and then every single day push lower, and then it goes all the way down, right? So here's the deal. I talked about TVIX, and I remember in the past what I said. If we get to $20-something or even like low $30, I will be thinking about buying TVIX, okay? Because, you know, getting to that complacent that quickly is obviously a warning sign of what's to come. Just keep that in mind as we move forward. It's almost like a contrarian thought, but you can imagine when we're in the 20s, right, low complacency levels, we can at some point, the question is when, right? You don't know when it's going to happen, but you can see some warning signs popping up, and that's when you can certainly start accumulating TVIX. But are you going to accumulate TVIX right now? I would beg to differ, because it's on a downtrend, right? It's still, relatively speaking, it's still over, you know, $35, and there's still more room to drop for volatility. So, you know, that's that. Let's see where we close on SPY. 281 exactly. Now that's... See, here's the deal, right? Look at the candle that was formed today. You can say, well, does it look like we're trying to form a top right now? It doesn't, right? It doesn't. But at the same time, you can also recognize that we're nearing the top of this candle over here, which acted as a resistance. So, you know, give or take a couple, but we should be moving... should get close to the 50 period moving average as it's sloping down, and see how that goes as we move forward. Crude oil. Now, crude oil, based off of today's trajectory, looks like it's in trouble, okay? Here's the deal. We have a support line at 61.96, and unfortunately, today it was supposed to push higher, and it didn't. And we ended up closing below my support line, which is not good. Obviously not good. I mean, I feel like crude oil is attempting to find a support. And we talked about crude oil attempting to reverse somewhere around my red line. Optimally, I want it to reverse back to the upside slightly at my red line. Didn't happen. And you guys know, if it doesn't happen at my support area, I don't like to be in the trade. Even if it reverses tomorrow, I don't want to be in the trade because it already broke my support line, which I've done technicals on already. So here, I think obviously the overall trajectory is going to be to the downside. But the thing is, when are we going to get that bounce, since it is still oversold? And, you know, we can still form another bear flag before coming lower. So if it goes lower, next target, $59. That's that. But this is going down quickly. And we talked about the ticker to watch if you were interested in shorting crude oil, which was DWT, right? So I'll just point this one out to you guys. I wasn't, you know, really I don't recommend stuff to, but you know, DWT, I talked about how this was pushing higher, and this is in fact still pushing higher, now over 846. So DWT, you guys know what that is, right? As crude oil pushes lower, DWT pushes higher. Inverse relationship. So that's the one. I think, you know, for now it might be too late to get into. That's just my opinion, guys. These are not recommendations, but in my opinion, it feels like it might be too late to get into DWT, because I'm looking for a bounce at some point, and it's not happening. But you know, that, take it as you wish. Sometimes it doesn't happen exactly as we expect it to. For example, like, you know, S&P 500 SPY. You know, I was expecting us to come down a little bit, perhaps overshoot this level before going higher, which is what I wanted to see. Didn't happen, you know, but the good thing is our group has been accumulating. If you're part of the group, you know why we were accumulating, and, you know, and ready to prepare us for that push higher, you know, whenever it would occur. If it dipped back down here, I would have added to some more of my positions. And you might be like, Kevin, well, it's easy to say after the fact, after this move. Yeah, but, you know, but the thing is, I talked about to the group during that time, during these candles that were formed over here. This was the 31st, the 1st, the 2nd. Talked about accumulating positions during that time. That's that. Natural gas. So natural gas right now, I will take you guys to the weekly chart. Obviously, we had a massive gap up, right? And the thing about this is natural gas is, you can imagine a gap up, very nice for natural gas if you were in it, all right? So here's the deal with this. Natural gas, when it gaps up, it can certainly move higher in the next few weeks. Have to place that in mind, right? When it gaps up, it can move higher. But at the same time, when it gaps up, it can be turbulent and gap down the next week. Okay? So, in my opinion, for natural gas, the overall trend is to the upside. But you want to be cautious in terms of a weekly close and weekly open. That is, holding it over the weekend might be more dangerous than you think. Okay? That's something like that. And then look at this. Here's a gap up, but this is within several other candles, so I guess this is not near. But look at this. Gap up, and then what happened? You know, we have a candle that was inside the green candle and then move lower, right? So moral of the story is, once it gaps up, if you weren't in the initial bullish run, it's more difficult to identify, you know, whether you want to take a long position or a short position. I think intra-week, you could take a long position. That's my opinion. But if you were to carry it over to next week, that might be more dangerous. I think that might be playing your odds a little bit. So, gold futures, 4/GC. So for gold futures, here we are right now. And gold, you know, let's see. So it seems like here's the resistance, 1241. We've talked about this over and over again. You know, this is... you know, hit the rewind button on my previous videos, and you can gold futures 1241 resistance, gold futures 1241 resistance, and then back here it was gold futures 1211, 1212 resistance. So, guys, why am I talking about this? Well, the reason is, you know, here is the support area around 1215, 1216, and it looks like it wants to go back down and test that area, even though the overall momentum is bullish for gold. This looks like it wants to go down in the near term, so be it. I mean, what can you do with this chart? It's once again struggling to move to the upside. Okay, we will take a look at your tickers. Before we do that, we talked about the course, right? So I think we have some members who joined the course but aren't in the Discord group. So if you're one of those members, make sure to hit that Discord group chat, because we do live group chats during the weekdays, and I actively talk to you guys about, you know, the patterns that I'm looking at. So if you're not in the Discord chat, you know, feel free to check that out. And then also, if you enjoy these videos, please hit the like button. Highly appreciate it. It's really your support that makes this possible, so keep it coming. Thanks, guys. Eric, tackle your CRM. Oh, guys, you guys know I like this company, right? I've told you guys, this is great company. CRM, Salesforce, and you know, looking good. We're over the 200. We've gone over the 50. We've gone over the 20, the 150, sorry, and then the 20 moving averages, and we're pushing higher. I like it. It's sold off quite a bit, so there's a lot of more potential than you think with this one. And if markets do indeed, in fact, push higher in the long term, in the medium term, not necessarily later this week, but in the you know, next month, this end of this month and next month, then this one certainly can recover, and we'll be watching that earnings coming up later this month as well. I think there's a lot of potential for this one. Good job, Eric. Where's your resistance line? Here's your resistance, 148.80. Not placing too much emphasis on a support line. And guys, you know, ask yourself why I'm not for this stock ticker right here. Ask yourself why I'm not placing that much emphasis on a stop loss. You know, that's a quiz question for you guys. But your resistance line is over here, 148.80. Okay. Nail. So this is a bull ETF. Okay, so MNHS323. Can I please take a look at nail? So yeah, so nail. I mean, this has been declining quite slightly, and you can imagine, well, why were the market so bullish today, but this one not being able to push up, right? That should be, you know, signaling alarm, alarm, alarm. So right now this is still on a downtrend. You know, we are at the 20 period. We have recovered a little bit. I can see what you're seeing, which is you're expecting. Well, this is my previous trend line, lower low. Interesting. You know, I see what you're seeing. You're like, oh man, there's a lot of potential for this one. Should it go higher? That's just 18% already. But be careful, because this is one that I would probably set a stop loss just in case we break the trend. You know, just make sure you know where to set it. Members of the course know where to set the stop loss very closely. So, but right now, this looks like it's still likely or could move to the downside, and there's no reversal at this time. It doesn't seem like it. I need more confirmations. So thanks, guys. OSB, analysis of OSB. I'm interested in buying this stock. So OSB, this is another one where it is in a little bit of a trouble right now. So why is it a little bit troubling? I mean, you can imagine sell back to 24. So this is from plus 40 to $24. That big of a move signals something's wrong in the company. Okay, regardless of what this company does, something's wrong in this hit. Okay, because it shouldn't sell off that much. And we broke yearly lows, and we came up, sure, you know, on whatever. I'm not sure what this bounce was caused by, but we're below the 20 period again, and we weren't able to close above. So, you know, the question here is, you know, here's the weekly chart. You know, we're going down significantly, and you know what? On this chart, it looks a little better. I can see you attempting, if you wanted to perhaps get to the 20 period. You know, get that 5 to 10%. I can see that happening. On this chart, it doesn't look as bad, but on the yearly chart, breaking yearly lows by that significant margin, that signals trouble in the future. So be cautious. Maybe short term, okay. Long term, I wouldn't. Oof! Yikes. CSCO. Okay. CSCO, you know, part of the breakout of the markets today. CSCO broke out as well. Just keep in mind, earnings are coming up 11/14, which is in a week, and we're nearing yearly highs. So this one, you know, this one looks good. I mean, it's breaking out, and it can move higher. This one can move towards $49. So the thing is, you know, this is only 2-3%, so are you willing to play that 2-3% if you weren't in it already? I do apologize, I didn't do a video yesterday, but yeah. Long on SD. Appreciate all the hard work. So yeah, your resistance line is 49.27. McCombs, let's take a look at ATVI, Activision, right? Yeah, and this one is signaling trouble. Activision, perhaps what will give it a boost is tomorrow's earnings report. Okay, that might be the catalyst that moves it higher because we're so low. But until we can see that, this is likely to play on to the downside. And you guys know I don't like to play earnings. And this one, I mean, you know, I can argue it both ways, right? We're oversold, we can move higher, but at the same time, look at all these red candles. Like, it looks like it wants to push lower before it moves higher. I think we need to consolidate a bit more down here before we see that movement. Perhaps tomorrow after earnings, we'll get a better picture. Tomorrow and the day after, we'll get a better picture of where to take, if a position, on Activision. I think overall, this is not... Let me take a look at a 3-year chart. Yeah. Oof. Yeah, it's all on earnings, guys. You can imagine if we come down in earnings, boop, pops it back up to 71.38, you know, everything would look completely different from what we're looking at right now. So wait for that to occur first. Synthartist, you made a pretty good comment about Apple, which I agreed with. And this was 3 days ago that you made. So 3 days ago, and you know, let's not talk about what Apple did today, but 3 days ago, it looked like Apple could move lower, right? It could move lower, before it moved higher, because there was a gap area, but we didn't even hit the gap. Everyone was looking at this gap area. We fell short of this gap area, and then we reversed back up. Well, you know, this was, you can imagine, you know, here's the response. But regardless, now that this has happened, okay, now that this has happened, it looks fine all of a sudden. So like, Kevin, why does it look fine? Well, here's the lower low trend line that we've established. Today we're above it. That's very good for Apple. Okay, that's very good for the NASDAQ, obviously. We've recovered that, and we place emphasis on the 3-year weekly chart. So remember, the week hasn't ended yet, so anything can happen at this point. But here's the deal. Here's the weekly chart. We cut below it, but we immediately recovered over it. That's a good sign. If we can maintain this on a weekly close, look for this one to push to the upside to 220. And yeah, this one has the potential to move higher, and that would take the NASDAQ up with it in the meantime. Okay, guys. That is everything I'm tackling today. Thank you, everyone, for all of your comments. Be sure to keep commenting if you like to. I read through all of your comments, and a lot of them are very interesting, engaging, and you guys do some good tickers. Let me just like your comments really quick. You guys make some great comments and make the teamwork very sound, right? It's like a package. I push it forward, you guys push information forward, and then we have a nice package. So good job, guys. Keep it moving. Remember, FOMC meeting minutes tomorrow at 2 p.m. Eastern time. That might shift the markets a little bit. Right now, be cautious. When we're getting some extreme optimism, caution, okay, as we move forward. Thank you guys very much for your time. See you guys in the next video.